Welcome back to another episode of the WHIP Report. This is R. Gregorian. In this lesson, we're going to combine all three elements in reconciling job, billings, or revenue, and job cost activity to the trial balance. As you may recall from the previous lesson, QuickBooks in particular has a job profitability summary report. If you're not using QuickBooks, I'm sure there's a very similar report that can even provide you inception to date billing and costs. QuickBooks is a little different. You can adjust the date range to provide that information, but for our current example, we've got a P&L, profit and loss by job summary here, which you can see second story, addition, basement, remodel, costs. This is actual cost, actual revenue. What this actual cost should reflect is costs incurred through the reporting date, assuming December 31st, 2022. This is the cost incurred on these projects through December 31st, 2022, starting from January 1 of 2022. You can adjust the dates as you go through it, but for our purposes, this is what these balances reflect. All the payroll, materials, subcontractor, general costs, even overhead allocations. So we've got that column here. This actual revenue billings to date should include billings from January 1 of 2022 to December 31st, 2022. Again, that depends on the date range you provide. So this should also include billings through retainage as well. So we have this report here. Typically, there isn't a clean tie-out to the trial balance for this report. And what I mean is, if you pull up your trial balance for the current year, the total cost activity and the total revenue activity won't tie exactly. Why is that? It's very typical for you to obtain projects that aren't worth setting up specific jobs for, little jobs here and there that you consider insignificant. It may be a $5,000 job, it may be a $10,000 job that you just directly bill from QuickBooks without assigning it a specific project code. So these jobs here are for specific projects that you've assigned. So as you know, you'll have some that were never assigned a specific job. It's not worth the hassle. So that's affecting your revenue balance without affecting this job subledger. So that's something to keep in mind and make sure you can identify those differences. It's fine, that happens very often, that these costs don't agree, but majority of the time is just perhaps it's service work that's incorporated in this revenue account that you don't assign a specific job to. So that's fine. As you see here, there's this overhead line. This can be interpreted as a little misleading, but for our purposes, they've just included all of the general and administrative expenses that you'll find in the profit and loss or the income statement into this overhead project. So this is under the cost column, 28,000 in overhead. That's really just general and administrative expenses. I'm sure in your system you have costs that have been assigned to some of these general and administrative expenses that were related to a particular job. And with that, you'll want to reclass those balances out to the cost of sales accounts. And what I mean by that is if you open up the profit and loss detail, you'll see a breakdown by account, and you may see repairs and maintenance for $5,000. You may have purchased a specific piece of equipment for a project that you wouldn't have needed otherwise, and you charge that equipment to the job, and along the way you needed to make repairs to that job, so you assign the repairs and maintenance to that job. Now, In the system, uh, that cost is assigned to the project, but it's going to the general and administrative expense under repairs and maintenance. So obviously that's in a different line item. You'll want to move it out of that line item into cost of sales. And this is what I mean by that. So if we look at this basement remodel, this is the P&L by job detail. You've got construction income, cost of goods sold, or just cost of sales. These are, gross revenue, cost of sales, and then you typically have your general and administrative expenses here. What you'll see in your system is you may have fuel billed directly to this job or recorded to this job. That's affecting the total balance at year end. So this may be, $50 in fuel for basement remodel, but as you can see, that's not incorporated into the cost of sales. That's living in a general and administrative account. So all you do is you record a credit for that amount and you debit cost of sales. You can have a specific cost of sales account for allocations, even though it was a direct cost incurred, to move that to the cost of sales. So it's not living in general and administrative expenses. That's what I typically see with clients using QuickBooks. There are a lot of project-specific costs incurred in these general and administrative expenses that need to be reclassed to cost of sales. It's not an adjustment reducing your bottom line or your net income, but it is changing the way the information is presented. And it's more suitable for your actual practices of how the business is operating. You want to keep the general and administrative activity to activity that supports operations, that supports the construction projects. You try to limit the amount of job cost activity that you record to general and administrative expenses. So as you may recall, this is the job subledger reconciliation. All this is just copying over the P&L by job summary activity into this reconciliation work paper, which you can find on the website at www.thewhipreport.com. You take your current year billed revenues, which, as you saw, was the current year, January 1 to December 31st billing activity, and the costs associated with that. And you paste that information here, and that sums up at the bottom. Down here is where the reconciliation happens. This unadjusted is coming from the trial balance. Unadjusted meaning we haven't recorded those closing entries. In this situation, we're talking about job activity billings and costs. So we see that these are the account balances for year end obtained from the 12/31 trial balance. Just paste it into these cells here, and we see that amount reconciles, no difference at all. Same thing with costs. We pull up all the cost of sale accounts, and we want to reconcile that to the cost activity obtained from the P&L by job summary. There's a difference of $720. Now that difference for our purposes is not significant enough for us to worry about it in relation to the total balance. So we're going to disregard that difference. It's immaterial for our purposes. So this is the big first step in reconciling the revenues with the trial balance and the costs with the trial balance. It's an important step, highly recommended before getting into building any schedules. Now for our example here, it's a very simplified example. We haven't even discussed prior year billings. Obviously, projects overlap years. They may run for, over 1 year to 2 years to 3 years, even 4, depending on the size. I mean, it just depends. So that's something to keep in mind. That's what these columns are for. Depending on how the activity is recorded, prior year revenue could represent what was billed and recognized through cost in excess or billings in excess. that just varies. So for our example, I think it's best to go through a simplified version so we can see how this is all coming together, because concepts are the important piece. You know, everybody does things differently, but the reconciliation, the inputs are going to be pretty much the same. And as long as you know what we need, you should be able to build these schedules to then go into building your WIP schedule, your closed job summary. So this reconciliation serves as the foundation of building those accurate WIP schedules.